10 popular investments to avoid. In this video, we're revealing the top 10 popular investments to avoid to safeguard your hard-earned money. From cryptocurrencies roller coaster ride to penny stocks tempting allure, we've got you covered. But remember, these investments are not as simple as they seem. It's crucial to stay informed and cautious. Now it's your turn. Have you dabbled in any of these high-risk investments before? Share your experiences in the comments below and let's learn from one another. Thank you for staying savvy. Ever wondered if there are popular investments out there that you should steer clear of? Well, you're in for a treat. In this video, we're spilling the beans on 10 investments you should absolutely avoid to keep your hard-earned money safe. Don't fall into the traps, don't get scammed. Number 10, cryptocurrencies. Cryptocurrency is digital money that's super tricky to handle. Here's why it's not your best choice. Cryptocurrency is like a roller coaster. Imagine your money going up and down like a wild ride at an amusement park. It's like trying to catch a butterfly with your hands. You never know when to buy or sell, and then you might end up losing lots of your hard-earned money. Cryptocurrency is pretty complicated. It's built on this fancy thing called blockchain, which can be like trying to solve a puzzle when you don't even have all the pieces. If you don't get it, you might make bad choices and end up regretting them later. Cryptocurrency is still new. It hasn't been around for too long, and we're not sure if it is going to grow up to be a superhero or just fizzle out like a wet firecracker. This means you could risk losing everything you put it into. Also, some people out there are just waiting to trick you out of your money. They've done it to others and beginners and their favorite target. So if you're new to this game, be careful with cryptocurrency. It's not as simple and safe as putting your money in a piggy bank. Stay cautious and don't let the shiny promises blind you to the risks. Number 9, Nigerian prince. One day you receive an email from someone who claims to be a Nigerian prince. This person says they're in a tough spot and urgently need your assistance. They tell you about a huge fortune they have, but for some reason they can't access it. They promise to share a substantial part of it with you, but here's the catch: they want you to send them some money first. The story might change a bit, like they need money for fines, fees, or bribes, but the bottom line remains the same. Send money now and you'll get more money later. Listen up, don't fall for this trap. There's no such thing as easy money. This kind of scam, often called the Nigerian prince or the 419 scam, is one of the oldest and most well-known email frauds. While many people today can spot it as a scam, these tricksters have adopted newer versions. Might not just ask for cash. They might want your bank details, pretend to be you to commit financial fraud, or even pretend to be in love to manipulate you into financing their travel or immigration. If you've ever received unsolicited money offers, be on your guard. Even if it seems to be from a trustworthy source, take a step back. Before you make any commitments, talk to a financial advisor and never share your personal or financial information with unverified people or entities. Stay alert and protect yourself from these schemes. Number 8, fallen angels. Fallen angels are stocks or bonds that were once doing well but have taken a significant hit. In the case of bonds, it happens when a company that used to be highly trusted now has a low credit rating. As for stocks, these were once strong but are now struggling. People are sometimes drawn to these fallen angels, hoping they'll bounce back to their good times, but it's like trying to catch a falling knife. Investing in plummeting stocks can be risky. For example, when a stock loses 50% of its value, it might keep dropping, maybe by 70%, 80%, or even 100% of its original value. Since it's tough to predict exactly when a stock hits rock bottom, it's better to wait and invest when you see a consistent improvement. Only then can a stock go from being a risky choice to a promising investment. So be careful and patient when dealing with these fallen angels. Hey, before we continue, we want you to know that we're always making new content, so make sure you like and subscribe to our channel so you don't miss anything. Number 7, airline stocks. Airline stocks like those of Delta, JetBlue, American, United, Southwest, and more are famous brands, especially for frequent travelers. But be cautious, as even before the COVID-19 crisis, investing in airline stocks had its risks. Back in 2013, billionaire Warren Buffett called them a death trap for investors. However, he later changed his mind and became a major shareholder in leading airlines like Delta, Southwest, United, and American. Interestingly, Buffett has now gone back to his original opinion. A CNBC report revealed that Berkshire Hathaway has sold its entire stake in the U.S. airline industry. Over the years, several top airlines, including United, Delta, U.S. Airways, and Northwest, have faced financial challenges. This history shows that the airline industry can be quite unpredictable. Even when airlines appear to be doing well financially, they can still be hit hard by unexpected setbacks, especially in the face of recent global events. So be warned that airline stocks can be a roller coaster ride for investors. Number 6, private placement. Now let's talk about private placement. It's like a special way to buy stocks, but it's not like the regular stock market. These stocks are from companies that aren't on the public stock exchanges. To get into this game, you need to be an accredited investor. The U.S. Securities and Exchange Commission says that means you have to make over $200,000 in a year or $300,000 if you're married for the last 2 years and expect to make the same this year. Another way is that if you have more than $1 million as your own money, but here's the catch. Not everyone can join this club. Some people will tell you that private placements are golden opportunities, but be careful. Just like penny stocks, there's a risk you might get fooled. Some people who want you to invest might only talk about how much you can make, not the risks. Also, selling these investments might not be easy. If the big players or company insiders sell first, your investments might lose value, so before diving in, think twice. Number 5, annuities. Annuities come in 2 main types, fixed and variable. In a fixed annuity, you hand over your hard-earned money to an insurance company. In return, they promise to give you a set income for a certain period or even for your whole life. Now there's the variable annuity. Here, you invest your money in things that are kind of like mutual funds. The catch is your income can go up and down. It might give you more cash or less than a fixed annuity. So why the caution sign? Well, while annuities might work for a handful of people, many can achieve the same goals with different investments. And let's talk about the drawbacks of annuities. Brace yourself for some high fees and steep charges. We're talking about 7% if you decide to take out your money soon after you put it in. And there's more. Just like with IRAs, you can't pull your money out of an annuity before you hit 59 and a half without getting smacked with tax penalties. So before you dive into annuities, consider your options and watch out for those pitfalls. Number 4, currency trading. Engaging in currency trading is like walking on a tightrope, not recommended for newcomers. It's a complex world with lots of twists and turns, and it takes time and practice to navigate successfully. Here's why you should steer clear of currency trading. Borrowed trouble. In this game, you can borrow money from your brokers to play with bigger amounts than you have. Sounds good, right? Well, not for beginners. It can magnify your wins and losses. If you're new and not a risk expert, this can lead you into serious trouble. Wild roller coaster. The currency market is like a roller coaster on steroids. Prices can jump all over the place for various reasons like economic news, politics, or even natural disasters. It's like trying to catch a slippery fish. Tough to make money and keep it safe. Non-stop action. Imagine a market that never sleeps. That's the currency market for you. It's open 24/7, 5 days a week. This means constant vigilance and managing your trades around the clock, which can be a headache. Knowledge gap. Successful currency trading needs deep knowledge about the market and what makes currency prices tick. People who lack this know-how are like rookies playing against pros, not a fair game. But wait, there's more. Newbies in currency trading are also prime targets for scams. Tricky brokers and websites promises big, easy money with no risk. They're not your friends. They just want your money. Beware. Number 3, REITs. Real estate investment trusts, REITs, are especially not for beginners. They're like puzzle pieces, more complicated than regular investments like stocks and bonds. They have their own rules, like giving out dividends and special taxes. If you're new, it might be hard to figure all this out. And here's the tricky part, REITs aren't easy to buy or sell fast. They're like the slowest car in a race. This can be a headache, especially if you need your money urgently. It's like trying to get your wallet from a locked safe during an emergency, so be cautious if you're just starting out. Number 2, binary options. Beware of binary options, a tricky financial game where you can predict the price of something and could win big or lose everything. It's like a coin toss with your money. Here's why beginners should stay away from binary options. Binary options are like all or nothing bets. If your prediction is wrong, you kiss your money goodbye. The potential for big payouts might sound tempting, but remember, the bigger the reward, the bigger the risk. You can even borrow money to make bigger bets, but it's a double-edged sword. If the trade goes south, you could end up owing more than you can handle. Be careful where you play this game. Some platforms aren't properly regulated, so you might not have anyone to turn to if things go wrong. They sometimes try to sell binary options as a quick path to riches, but don't fall for it. Binary options are complex and risky. They're not for beginners. Stick to safer investments. Hey there, before we reveal the top one on the list, make sure you tap that subscribe button and turn on the notification bell. This way, you won't miss out on our newest videos. You can decide if you want notifications for just a few videos or all of them. It's your choice, and if you're using your phone, don't forget to enable notifications in your settings. Penny stocks. Penny stocks are super cheap shares from small companies, often less than $5 each. But when people talk about penny stocks, they usually mean those that cost less than $1. What makes them seem appealing is their low price. Even a tiny increase in their value can lead to big profits. For example, if you buy a penny stock for 50 cents and it goes up by 10 cents, you've made a 20% profit. Sounds impressive, right? But there's a catch. These low prices often reflect struggling companies that might be close to going out of business. The world of penny stocks is full of shady stuff. Some folks try to hype up a particular penny stock, saying it's the next big thing just to make its prices go up. Then when it's worth more, they sell their shares and pocket a profit. So while penny stocks can be tempting because they offer the chance for high returns, they are risky. Now that you've got the inside scoop on investments to steer clear of, it's time for you to make smart choices with your hard-earned money. Which of these popular investments have you tried before? Is it penny stocks or REITs? Just let us know in the comment section below. And as always, don't forget to hit that like button if you found this video helpful, and subscribe to our channel so you never miss out on my latest content. And for more resources and links related to today's topics, be sure to check out the description below. Thank you for watching, and we look forward to reading your comments and engaging with you in the next video.